Basel Committee endorses global crypto banking rules to be implemented by 2025. The rules suggested that a bank's exposure to certain crypto assets must not exceed 2% and should generally be lower than 1%. The Basel Committee on Banking Supervision, BCBS, has endorsed its global crypto banking rules for implementation by January 1, 2025, according to an emailed statement on Friday. An accompanying document by the committee, which is the primary global standard setter for the prudential regulation of banks, suggested that a bank's exposure to certain crypto assets must not exceed 2% and should generally be lower than 1%. These particular assets are tokenized traditional assets including non-fungible tokens, stablecoins and unbacked crypto assets that don't meet classification conditions. Meanwhile, those assets from the list above that do meet the criteria are subject to capital requirements based on the risk weights of underlying exposures as set out in the existing Basel framework. Previously, a group of 8 traditional finance lobby groups had written to the committee suggesting that just a 1% cap on banks could be too restrictive and could derail innovations using distributed ledger technology. Now there is more wiggle room. Today's endorsement by the GHOST, Group of Central Bank Governors and Heads of Supervision, marks an important milestone in developing a global regulatory baseline for mitigating risks to banks from crypto assets, said Tiff Macklem, chair of the GHOST, the oversight body of the committee. The classification conditions the committee have set out include ensuring crypto passes a redemption risk test and bases. Follow the URL for the full article. For more on this story, visit the news article link.